revitalizing communities in need of new investment. We want to make sure that this incentive can support all of those goals. Next. MNOppCo team, there are 3 of us who are working on this regularly. You've already heard from Melissa, who's president and CEO here at Northspan, and myself, and Laura Nilsson, who's on the call also with us here today. Just a lot of managing of the property or project directory. And then, of course, we'd like to thank all of our founding partners who made the Minnesota Opportunity Collaborative possible. That includes LISC Duluth, LISC Twin Cities, the Duluth Superior Area Community Foundation, Minnesota Department of Iron Range Resources and Rehabilitation, Minnesota Department of Employment and Economic Development, and the Southwest Initiative Foundation. So thank you to all of them for their generous support and keeping this program going. So again, there are 3 parts to the Minnesota Opportunity Collaborative. The first is statewide collaboration, which we have opportunities for through this webinar series, which we ran through most of last year and into the very beginning of this year. Took a little hiatus as coronavirus consumed our lives for a few months there, but now we're back at it. We'll be doing this bi-monthly through the remainder of the year. And everyone who's on this webinar right now will get information for our next one in August, when we'll feature Danielle Lewis from Whipley, who is a CPA, who's spent a lot of time in the weeds on Opportunity Zone and the regulations that go with it. So we're looking forward to that one. And you can see all of our upcoming events on the website at MNOppCo.com/events. Second piece of MNOppCo's mission is to focus on education, going out into communities, working with economic development professionals, with developers, with other people involved in the community, just making sure that they understand what opportunity zones are, how to use them, and the opportunities that they allow for. So in the past, these have mostly been in-person workshops, but now we're, as is everyone, adapting our offerings. We recently held our first digital workshop in the new year, working with a group on the Iron Range. So we're certainly available to bring that training to other places, and happy to help communities understand how to use opportunity zones, and bring along some experts with us who can give you all the details. And finally, we have the directory. It's the place where we're listing projects in opportunity zones in Minnesota that are looking for investors. So we've got over 60 currently listed on the directory. You can explore that on our website. You can see the stories that we're telling about these projects to try to encourage investment and make things happen in them. There are 3 different types of projects that we accept in that directory. The first is a traditional real estate development. Second is an operating business seeking investment. And finally, we also list available properties that are located within opportunity zones that are looking for investment. And you can find that directory at MNOppCo.com/directory. We've built out listings that show not only the location of these projects and the basic details about them, but also go into some of the community narrative and understanding why these projects are important to their communities and what benefits they might bring. So now that we're through that, we'll introduce our guests for this webinar. And we've brought our friends at the Governance Project along with this one. And the Governance Project is a group that has been involved in opportunity zones really from the beginning. A national nonprofit who have been collaborating with MNOppCo for really over a year and a half, and working to as an innovative public-private model to accelerate policy solutions at the state and local level. So I had the opportunity to present at their Vermont Opportunity Zones Conference last year, and now we're sort of returning the favor and bringing them to Minnesota. So we have Colin and Yvonne, and you can read their bios there. And I guess at this point, we will turn it over to them.
Great. Well, thank you, Carl, and thank you for letting us be here today. As Carl mentioned, we have been involved in opportunity zones for the last year and a half plus, and really working with state and local governments to try and help direct the benefits from the OZ incentive to the distressed communities it was intended to help. And our work has really fallen into 3 main categories there. One is sort of similar to MNOppCo, focusing a lot on education and convenings and bringing people together to understand what the set of projects the community are and how to translate that from the community and public sector lens into the language that investors and developers really understand. The second area where we really work is around building white papers and toolkits and sort of broadly disseminating best practices across the country. As Carl mentioned, we work nationally and we're we sort of have this national to local model where we work really closely with folks on the ground and try and bring up the best lessons and spread them nationally. And then the last area, which Yvonne really leads at the governance project, is our technical assistance work, working pro bono one-on-one with local governments, with community groups who are trying to do the right kind of development and turn projects into really transformative developments on the ground. So what we're going to talk about today, and then I'll let Yvonne introduce herself. We're really going to talk about our GroundUp model, which emerged from our work in opportunity zones, and sort of the gaps we saw both in the legislation and in sort of what it didn't do and where it could have been improved. And also the gaps we noticed more broadly in the community development ecosystem, and where communities sometimes lack technical capacity and sometimes lack the time to really drive inclusive growth in the way that they want to. But before getting into that, I will let my colleague Yvonne introduce herself.
Hi guys, I'm Yvonne Durbin. I have been with the Governance Project for a little over a year now, and like Colin said, work more on the technical side of things, so tend to be building out financial pro formas, and once Colin paints a little bit more of a picture of the tool that we're going to show you, I'll be the one walking you through step by step what it looks like, hopefully get you interested in what we're about to roll out.
Great. So the GroundUp model that we are building is sort of simplest way to describe it is it's TurboTax, but for community development, pre-TurboTax. So what it is, two of the big problems we noticed are that communities have a lot of different ideas on what they want to have happen locally, right? Everyone on this call, I'm sure, if you're in local government, if you work with local government, you know that there are plans for what you want the neighborhoods you designated as opportunity zones to look like, or frankly, the neighborhoods that didn't get designated, but you still want stuff to happen there, especially now that we're sort of coming out of a time of extreme economic pain. You have stuff you want to build, but you don't necessarily have the time, and you don't necessarily have the background in, or not everyone does, have the background in financial engineering to sort of build the capital stack to make those projects happen. And this is something we've really noticed across our work in opportunity zones. As Carl mentioned, we did this prospectus workshop in the state of Vermont where everyone built these really nice menus of, here are the projects we have that want to happen, and we want private capital for these projects. But that's kind of where the ball stopped after building prospectuses. And we really see this as the next step after you build a prospectus. What are the finances? What goes into it? You have an idea for a project, but you really want to understand the size of the project, the amount of equity, the amount of debt, the details for financing it. So what we built is a really easy to use and hopefully even fun to use tool that allows you to, with a few simple inputs from your local market, to put in that information and to generate different types of capital stacks to help you better understand the public resources that come to bear on projects that use private capital, and also what the investor and developers see. And so we really see two key uses for this. One, if you're local government or your community group that works closely with the local government for modeling out the types of transformative projects you want to happen in your neighborhood. Two, if you're a part of a local government, to understand when a developer comes to you and says, hey, we want to build this and we need X amount of tax credits, to actually understand it, to gut check that and say, yeah, that's true. You need this amount of tax credits and we're going to work with you to have this happen. And so we really see it as a tool that catalyzes partnerships on the ground, which we see as sort of central, whether or not you're in an opportunity zone, the central element of what drives good development. But we also see it as a tool to stimulate more development, right? To be a part of everyone's pre-development process in terms of fleshing out numbers, in terms of vetting. It's kind of advanced back of the envelope math. So a few things about the model before Yvonne launches into her demo of it. It's going to be fully live for you to enter numbers in and play around with in about a month. And we have a link, which I will share while Yvonne's demoing, for you to sign up to get the latest updates on the model and get an announcement when it's live. Two, right now we're really working on fleshing out our resources and blog posts and sort of lessons from the field. And so if anyone on this call is interested in sort of contributing to where you really see this tool solving the problem you have, we would love to speak more and see if we can feature your work on the GroundUp platform. Finally, as I mentioned before, but want to underscore, this platform is free. We really see it as filling a gap that exists in the community development ecosystem around local capacity. And we want to make it available to as many people as possible. We're able to do this because we received generous funding from the MasterCard Center for Inclusive Growth. So our metric of success for this project is really how many people use it. So with that, I will hand it over to Yvonne to walk you through sort of what the model looks like and how you can build out your project finances through GroundUp.
Thanks, Colin. So hopefully everybody can see my screen right now as I'm going to kind of show you a mock-up of what it looks like. As Colin said, it's not completely live. So what I'm showing you today, as you can see here, it's kind of pre-filled to show you what it's going to look like along the way if you were actually filling it out. And please drop any questions you have in the chat. I will pause periodically, and I think Alyssa will jump in to ask me any of those along the way. So don't be afraid. We're very happy to field any questions about the model, and also, as Colin mentioned, about any resources that you think should be included along the way. So what we've built here, this is the landing page, and we've tried to make it kind of intuitive and as friendly as possible while still being a quite serious financial model. So hopefully you find it to be that as well, and kind of can keep in the back of your heads some projects that you might like to use this for once it's ready. So I'll just jump in. Actually, I'm going to start somewhere different. This is what your dashboard will look like. So we've built this out to be a place where you can create projects and create projects that are residential or commercial in nature. They're all real estate projects. But really the key here is that you can create as many projects as you want to. You can log in, and so all of the data behind it will be your own, and you'll only share it with people that you choose to share it with, so it's not open source for everyone to see. So you can put in your projects here, and this is just what the dashboard will look like with some of the key stats from sample projects we did. And the key I want to highlight before showing you the numbers behind the model is this duplicate function. So what we've done is created a way for you to spend the time going through entering all of the data that you need, but then really also you could come back in and duplicate, change one small thing about your model and compare. So we want you to be able to do this very easy sensitivity analysis where you put in all the numbers and then you think to yourself, well, what if I were able to secure that extra grant from the Family Foundation? How would that change my outcomes? Or what if I'm really not sure that those tax incentives are going to come through? What if I pull them out? And so we've created a really simple way to do that so that you can compare across projects and really come to the table, whether it be with investors or others in city government or local developers, whoever it may be, with a suite of numbers that are going to hopefully lead you to projects getting done faster. And that's really our goal here, is to see projects that benefit communities come out of this and hopefully faster than they otherwise would. So let me jump in. So you can see on the left-hand side, when you're creating a new project, those are the tabs that we're gonna go through. So starting out with basic information and then heading through types of construction you're choosing, and then into the more complex of the project finances. And that's really what we see as the value add of this model, is helping people construct a capital stack for these projects. And I will highlight here that while we did build this with opportunity zones in the back of our minds, it's not specific to opportunity zones. So if your project is not in an opportunity zone, you can absolutely still use this and it'll work just fine for you. Let me see. To move the Zoom window. So this is what it'll look like when you start into a project. We just start out with your very basic information and you'll see these grayed out, this grayed out text, which will hopefully guide you to what it is you actually need to do here. But for the remainder of this, I'll be showing it filled in so you can see what it'll look like as you actually go through and build out a project. Then you select, are you doing a residential, a commercial, or an office build? And you can choose any or all of those. So it's kind of a smart model, if you will. So it'll only take you to the sections that you've chosen, so you don't have to see things that aren't relevant to your project. And we know these are quite broad categories. We've really built this out with the eye towards being able to model the largest number of projects in the largest number of different communities across the country. So many different project types will fit in this commercial box specifically, and that we did on purpose. So we start out looking at what is the land that you're buying, how much does it cost, when are you purchasing it? And I want to highlight along the way, on the right-hand side, you can see these little tips start to pop up. And that's one of the reasons we're not live yet. We're still working on the resources that'll be included on the side. So for the fairly straightforward ones, there'll be these simple, smaller tips, but kind of as you get further down the line, they'll be larger, more links, more resources. So I just wanted to show those to you on this page. So for today, what I want to run through is the residential section to really give you a flavor for everything that goes into the model. The commercial and the office will look quite similar, but obviously be focused on those types of builds. So at the top of every section, we tell you what is the data that we're going to be asking you for. And really a key thing for you guys to note here is that we are not providing you with very many numbers. What we're doing is providing you with guidance on how to find the numbers and which numbers are relevant to you to build this, whatever it is you have in mind. So we felt like it wouldn't be as helpful if we gave you national averages and then we ended up with somebody in Minnesota having the exact same project as somebody in New Jersey, which is just unlikely. So really what we do is help you drive towards the correct hyper-local data that'll get you to project outcomes that are right for your neighborhoods. So in the residential section, we start out by asking you, are you building new construction? Are you doing a renovation? Are you doing no renovation? And then we ask you only about the types of construction that you're building. And here, this is a good example for you. You'll see our little mascot, Gary the groundhog. If you'll remember the paperclip from Microsoft Office, he is of the same ilk. So throughout, he'll be providing some helpful tips, both in terms of ranges for some of the numbers that you'll need to enter that we see as reasonable, kind of anchor you, but then also explanations of some more complex financial terminology. As Colin mentioned, we really want this to be something that can be used by people who either wear many hats or don't have a project finance background. So we want to enable particularly our local government people to be in the driver's seat of this development, even though maybe you haven't had the training or don't have the time to put into normally building out complex Excel models. So this will hopefully also do some educating if you're interested. There'll be a lot of resources and links along the way to help you kind of gain a more in-depth understanding of project finance and what it goes into building out these projects if you're interested in kind of diving deeper as well. So we also ask you Do you have zoning requirements for parking? This is a big one that people often forget, and it can be quite expensive. So we try to throw in some tidbits like that along the way that'll help you get to numbers that make sense. So I'll also show you, going further into residential, we look at what type of units are you going to build? Are they studio, 1, 2 bedroom? How big are they? And then what's the breakdown in your building between what you've chosen? And again, you see this white space on the right. This will be full of hopefully more helpful tips and information that lead you towards understanding, you know, how big is a studio apartment in my town? What's reasonable? Very different in different parts of the country. So we wanted to more provide links and guidance to who do you speak to locally to get that information, then give you numbers for something like that. And along the way, you'll start to notice at the bottom, we are showing you absolutely all of the calculations. So there's no secret sauce here. We really want you to understand the numbers that are going in and what's coming out. So as you make changes, this will change in real time, and you can see kind of what the impact is of the changes that you make as well. So we base our whole rent model for residential specifically on area median income, so that you can really think about affordability, as we are coming at this from an opportunity zone lens, and we've seen that affordable workforce housing has been a very key outcome of the opportunity zone incentive, and it's one of the things that we're also trying to push for in terms of having a community-oriented, positive local development. So what we've allowed you to do is choose the AMI that's right for your area. So maybe that's by state, by city, it could be by neighborhood. If you're targeting a specific area, a census tract, you can put that information in there. And then we'll walk you through kind of what does it mean to be considered affordable versus workforce federally, and then also what is rent burden, what's reasonable to charge people given the income that you expect people in that neighborhood to be earning. And we do allow for you as well to include 2 different levels of rent. So you can have mixed income development here. You can have affordable, and you can have also market rate. And of course, we've made this flexible enough. You could have these be any percentage you want them to be. So you could have your affordable at 100% and your market rate at 200% if you wanted to. This is just the guidance that we have here for you to do that. And I won't go into them today, but along the top, you can see there are 3 more tabs, and those will get you to more complex operating and revenue assumptions that you need to consider when you're building out a model like this. So everything from maintenance and repair costs to payroll for people on staff, and then growth assumptions. So this is a 10-year model. So we do have the option for, if you think your rent is going to increase over the course of 10 years, you think your expenses are going to increase over the course of 10 years, you're able to kind of choose a few different tracks for that as well. So I will, right after this, jump into looking at the taxes and project finance section, but I do want to pause briefly and see if there have been questions on that first section.
We have one question so far on the areas for median income. How big are the areas that are used for the median income? Is it based on a metro area, or what is that based on?
Yeah, so that's a great question. And the answer is it depends. So you can see there's this link here to HUD's website where they are mostly calculating that by city level. But it depends on your area, how locally that data is collected. So I've seen it as far down to a neighborhood or as large as the state. And it really depends for you as you're building this out, what is a reasonable number for you to include and target. So we're not providing you with those numbers, we're just providing you with guidance on where to look for them. And like the example that I like to use is Louisville, Kentucky. So I've seen 3 different AMI levels listed, one that's for the county, one that's for the city, and one that's for the neighborhood we were looking at. And they're completely different from each other. So it's very reasonable for you to look at all those and then decide what's actually realistic for your project. Because the biggest thing is you need to know, are you actually going to be able to get this rent if you're building? If you are targeting a county level AMI that has nothing to do with what's happening on the street that you're looking at, then it won't actually be affordable for the people that you want to live there. So it's very much a local question.
Thank you. That is the only one right now.
Okay.
All right.
Great. So I will jump into looking at taxes. And this really gets to the heart of us trying to create a place for you to think about everything that goes into a project and really consider, are there tax credits or public funding that you want to throw into this to entice investors to come in? It's really all about balancing out your capital stack and trying to hopefully spend the least local dollars for the biggest bang for your buck in terms of investors coming in. And so in this section, we allow for you to put in your local tax rates. And again, there'll be links to help you find them if you don't happen to know them off the top of your head. And then we have this large section on tax credits. And so if you're considering having any tax credits at all for the project, you can kind of test them out here and see what impact it has on your model. So we allow for you to put them in. They can come in at the beginning of the project annually or at the end after 10 years. And you can put them in by dollar amount or by square foot. And we recognize this is one of the things that people don't always know when they're headed into a project like this, kind of what the value of the tax credits will be that somebody would be able to get. But this is really where you can leave it blank completely and go through the whole model and see what the outcomes are. And if they're not great, you could come back and add some that might be realistic in your area, test it, and see whether that's something that could make a project go over that finish line from not super attractive to private capital to actually it is attractive now, and you might get investors for the project you want to have done. So this is part of that sort of sensitivity analysis that we hope that this will enable you to do to really think through how much money are you spending, what do you need to do to get a project over the finish line. So I also want to show you the project finances, as this is kind of the meat of our model. And what it goes into is first, how much does everything that you've chosen in the previous sections cost? So we'll walk you through, starting from site work costs, how difficult is it to build where you are, and then asking you the cost per square foot of the types of construction that you've built. And this is a place where we'll also provide quite a lot of guidance. These numbers vary wildly across the country, but have a very large impact on the outcomes of your model. So whether it costs you $150 a square foot or $250 is could be very make or break, as I'm sure a lot of you know on this call. So we will be providing resources as to who do you speak to understand this in your area, and how might you test it to make sure it's reasonable. So after that, we go into the other hard and soft costs of the model, and you can see we're including all the calculations here, so you can make sure that what you've done makes sense to you as well, since these are percentage based in our model. And once you've decided on, or once you've completed that cost section, we really move into the capital stack. So how are you going to pay for and fund everything that you've gone through and decided that you want to build? And we start at looking at your debt. So you can choose any percentage that you like. We know there are projects that want to take on no debt, or projects that want to maximize their debt, and we give you this debt service coverage ratio to help you understand whether you're able to cover your debt with your cash flow or not. And again, if that doesn't make any sense to you right now, there will be some helpful links and hints here along the way that'll help you to understand some of the finance terminology. So you can put in local loan rates. We have the ability for you to have a construction loan that rolls into permanent financing along the way. And I will just note, I didn't before, but there are two tabs at the top here, resources and the blog. So in that resources section, we will list out a number of more common tax incentives that you might consider adding in the tax section, and how do you go about adding them given the kind of options that we've provided you in this model. We'll talk about opportunity zones and provide you lots of links to that. We'll talk about different loan sources that you might consider in this section, particularly federal versus state, and sort of provide as much as we can there to help you have a more well-rounded understanding of what it is that we're getting at with this model. And then in the blog tab, there will also be sort of more pointed resources, both written by ourselves, but also by industry experts that'll go into some case studies that have used this model, and also some more in-depth conversation about project finance, about opportunity zones, about risk management and project finance, so that if you're interested in kind of diving deeper and understanding more the thinking behind how you should input these numbers, we'll be providing that as well, and hopefully an interesting way. So just something to consider as you're going through, that we really do intend for this to be an educational place if you want it to be, as opposed to just a plug-in chug financial model. So back to where I am, once you've decided on your level of debt, you can see that kind of picks out, shows you how much of your project you financed and then what's left over. And so on the next page, we get into the rest of it. And how are you going to pay for this project? What does the capital stack look like? And the one that I'm showing you here is quite complicated. There are quite a few different types and sources of capital. And that is really typical from our experience, especially in the opportunity zone world. So from a lot of the projects we've worked on, we've seen a need to include quite a few different sources. So we've enabled you to do that here and really test out, what does the capital stack need to look like in order for this to work? What is my gap? What happens if I fill it with equity? What happens if I fill it with debt? How do I get this project across the finish line in a way that works for everybody and brings investors to the table? So you can include market rate equity, you can include equity from your developer, and then lower down here, you can line by line add as many as you want to, both grants or philanthropy. So this is an equity section, but also you're able to include any philanthropic dollars you might be able to get. And then we have two different types of social impact equity that you're able to include. So one is return of capital. So some generous person wants to lend you the money and you just have to give it back to them with no interest. That you can include here. And then capped rate equity, where a different generous investor says they just want their money back plus maybe inflation or some other lower percentage that will enable you to really make the most of your project. So we enable you to include those as well as the traditional equity sources you might see. And again, this is really a place we intend for people to play around and test out what the numbers do. How does it change the outcome? How does it change whether or not the project is attractive? And again, this is part of what we're still working on. So we will be explaining to you in detail what are all these different sources, what do they mean, and some of their benefits and drawbacks too, because of course they all have them. So finally, we do include a couple of more sort of complex equity details, if you will. So if you want to pay out a preferred return, you're able to do that. And that capped rate equity I was talking about before, if you include it, what rate is it capped at? And finally, we look at your exit assumptions, so and operating assumptions, and there'll be a discussion here on project exit. So we have assumed this is a 10-year project, and in order for your equity investors to kind of get out and get their money back, you'll need to sell at the end of it. So a discussion of how do you exit and is it possible, and what risks do you need to consider in this will also be present on this page, as we know it's quite an important piece to consider while you're thinking about these numbers. So we've gone through all of this, and at the end of every section, we kind of give you an overview. What did you put in? What does it look like? But at the very end, this is what your outputs will look like. So you can see we are showing you the returns per equity, and you can see this is not a great project. And I show this to you today on purpose like this because we expect a lot of the impactful projects don't immediately look great. But we want you to be able to get to this page, look at these numbers, and then provide resources that say, okay, my numbers aren't great, what now? Which inputs do I go back and look at that have a really important impact? Who do I talk to see about grants or tax credits? And maybe also, this project just doesn't work for private capital at all. Maybe I need to be thinking about this differently. Maybe there's a reason that the investors haven't come looking for this yet, and hopefully provide a little bit of a reality check too. So this is really why we're showing this not very rosy project on this page. But in general, what we show you is all the numbers that come out and a one-page PDF. So what we've done is it'll pull in automatically all of the key project details on financing and how you're going to pay for it and what are the main costs and details. And it makes a pretty one-pager that you can use as a sort of little pitch sheet if you have an investor coming to sit in your office, or you're trying to get people interested in this project that you are hopeful people will want to look at. So we do provide that. And then there'll be, again, more resources on what to do with these results down here. And then a full 10-year financial pro forma. So you can expand into all of these sections and see the year-by-year cash flow in each category if you want to look a little bit deeper into what has come out of your project. And so we really hope that this is something that will enable you guys to push forward projects that you want to see done in your communities and really pick out the things that you've been thinking about in your opportunity zones and otherwise that you want to see done and test them, see whether they're feasible and whether somebody might be interested and what type of capital might be interested. So this doesn't replace once you moved into a pre-development, a full development process, and you have a developer and investors on board, they're likely going to do their own more detailed and complex financial model for the project. We see this as a step before that of getting people interested, bringing them to the table, and then hopefully moving on something that is good. So that's kind of what I have to show you all today. We hope that some of you at least will be interested in testing it out and using it on some ideas you have. And of course, along the way, we'll be available to answer questions as you're using it if there's anything that's unclear, but hopefully Gary the Groundhog will also provide a lot of the answers too. So I'll stop here and see if any more questions have appeared in the chat room. I'm very happy to answer anything about the model, the uses of this. But again, it'll be live in about a month. And our metric of success is that people like you on this call use it and find it to be useful.
Sure, we do have some questions.
Great.
So I'm going to start here at the top of my list. Are there certain or any or all fields required, or does it really allow you to put in different things and experiment?
So at the outset, nothing is required. So you can skip around and it'll show you which sections you've completed and which you haven't completed. So we understand that you might sit down to do this and then realize you don't have all the numbers, and we didn't want it to stop you from going forward. In general, to get to good outputs at the end, pretty much everything is required. So the example in that tax credits section will ask you, do you have tax credits? If you hit no, then none of the rest of those are required, but otherwise you do need to kind of go through the whole thing in order for this final page to make sense. But you can come back and save as much as you want to before you're ready to look at the end results.
Great. What's the difference between market rate equity and investor equity?
Interesting. I wonder where I had investor equity. So generally nothing, I hope. We'll make sure our terminology is consistent throughout, but in general, you could have investors that are looking for market rate returns, or you can have investors that are looking at looking for socially impactful returns. So we've seen some investors who maybe are family foundations or impact investors who are looking for slightly below market rate because they want to see positive social outcomes as well. Their metrics are both make money and provide affordable housing or provide a new park or whatever it is you might be building. And so that would be the differentiation between just generally investors as a broader category and market rate are really your typical investor who wants market rate return kind of above all else. But again, I'll make sure the terminology is consistent if it's not earlier on.
Okay, we're curiosity and wondering how or where you're pulling the data on the state level incentives and tax credits.
Yeah, so the way that we've built this out is that you'll need to come to the table with most of the numbers. And so what we're doing is allowing you to enter any of the hundreds of thousands, maybe, tax incentives that exist across the country into this model. So, and what we'll be providing is examples of very common tax credits. So if you want to do historic tax credits or something like that, that we see across the country, how do you use our model to do that? But otherwise, you as the user will need to come with the majority of the numbers that are coming in here because we did want it to be useful nationally.
Thank you. Okay, so follow up on the market rate or the equity component, maybe more define market rate equity and not return on investment.
Okay.
I can jump in here.
Maybe. I'm not sure that I totally understand the question, so go ahead.
I think in terms of market rate equity, right, you know, this understanding IRR box here is maybe helpful, and you know, Gary will explain throughout. But in general, right, like market rate equity is seeking some type of return that's in the double digits, right? 12% or higher in general, not in all cases. You know, there's different, right? There's social impact equity that's seeking returns that are slightly lower. And this varies per project and is sort of widely variable based on the type of investor. But in general, market rate equity is looking for slightly higher returns. So in terms of the return on investment is related to the market rate equity in terms of that's what it's seeking. And the market rate versus below market or social impact is just sort of what return it's looking for.
So maybe also like, what is an example of market rate equity?
So it would just be, so say you have a fund and you have a number of maybe high net worth individuals who in the case of opportunity zones, are putting their capital gains dollars into a fund to be invested in projects that are in opportunity zones. And so if those people are regular funds that don't have any social focus to them, then they will be seeking a return on their investment. So the fund will seek out opportunities such as maybe one of the projects that you do in here. And that would be a case of market rate equity. And the key here, and one of the things that we intend to explain quite thoroughly is, the different ways that different capital can come into a project like this. So like your debt will come in and be the thing you have to pay back first, whereas equity is a riskier form of capital for the investors, but they expect a higher return. So they'll come in and have no guarantee of getting their money back necessarily. But if your project does well, they want to see higher return on their investment than maybe the debt financing would. So we will provide quite a lot in the way of resources and definitions. So one thing I didn't completely note here is that pretty much every single question we ask will have an information bubble next to it by the time we're done, and we'll define all of the terms. So hopefully as you go through, once it's live, it will be very clear to you what the number is that we're asking you for and what the outputs are that we're giving you. So we're gonna provide definitions, and where it needs a longer explanation, links to further explanation of the terminology. That make sense?
Yeah, thank you. So another question here is, does the GroundUp system tell you which factors are contributing most to the return on the rate of return? For instance, why it's so high or why it's so low?
Yeah, so it won't be specific to your project, but we will be providing you with some hints along the way that tell you, this is something that's really key and very important, and you should make sure that you get it right or test it. Excuse me. So we'll be kind of hinting at that and providing you at the end a little bubble that says, if your returns aren't what you had hoped, go back and look at these 5 key inputs, because they will have an outsized impact on what you're seeing on this page. So we hope to provide a lot of guidance in that area to tell you, that your exit cap rate is much more important than your closing costs, for example.
Thank you. Would you be able to quickly show us, or even explain a little bit, what the difference is, or what's different for a commercial, specifically industrial project?
So the commercial and industrial type projects, the main difference is really that you're charging rent per square foot instead of based on income. So it's slightly less complex, but you can see it looks very similar on this page. New construction, renovation, efficiency. And again, we haven't built out those tips and hints here, but they will be here. And then, so we look at rent per square foot on this page. And then we look at all of your operating expenses. And so how are you going to, what else do you need to consider for running a building like this? And then growth assumptions on the next page. So really what it is like a quite general commercial space. So you're renting to commercial tenants. How much are you charging them? How much does it cost you to rent a building? That's the main focus of it.
Great, thank you. One last question so far. Just curious, you had made some comments about how the data will be able to keep the data inputted confidentially, and just how will you be able to do that, or what's the process to keep that use the data and keep it confidential?
So this is all behind a login page. So everybody who uses it will need to create their own individual password protected account. And so your projects all live here. We hope in our sort of second iteration not too far down the line that will have a share function here, so you can like have somebody else create an account and see the same projects as you if they're within your organization. But for now, it's all completely behind your password protected page. So if you want to take your outputs and share it, then that's your prerogative, but otherwise it will be yours alone.
The other thing I would quickly add is, which I forgot to flag up front, is we're a 501c3 nonprofit. We're not trying to like monetize data off of this. We're not trying to sell backend data, right? You're not signing away the rights to your data by using this. Like it is your data on your project. We're not, we've gotten this question a few times of, like, are we trying to make money off people by doing this? We're truly like, we're a nonprofit and this serves our aim of driving forward community development in a way that serves communities and serves the partners they work with. And so we're not trying to monetize data. And I know, I don't know if that's the direction that the question was going, but I wanted to flag that for everyone on the webinar.
Yeah, we do hope that if you use this and see a project come to fruition that you'll tell us about it, though. That would be nice.
Yeah, great, thank you. Another question has popped up. Does the tool allow you allow for different rents in the same property, maybe more expensive office space and then on upper floors of the building or different things like that?
So right now you can have two different rents. So you could build them out because the commercial and office are quite similar. So you could structure them each in the way that you wanted to and have two different rents for commercial and office, and you can have two different rents within within residential. So there's some ability to do that, but we haven't allowed for kind of this stratified multi-floor different rents option. I would say that, of course, you could back of the envelope it to put an average in if you wanted to do that, but we're really seeing this as kind of a part of your pre-development, does this work or not, as a project process. We hope that once you get to the point where you're determining floor by floor what rent you're going to charge, we're maybe a little further down the line and we'll need to start thinking in a more complex fashion than what we have done here.
Thank you. So then follow up to that, what might be the best way to input a mixed use project?
So at the beginning, let me see if I can come back to here. So you can select all of these, or only one if you only want to do one. So if you select all three of these, then it will take you to all three sections and ask you questions about including residential, commercial, and office space in the building. So that will be the mixed use case. So you could do only two, only one, or all three of these to get your mixed use development in.
Great, thank you. We don't have any more written questions in here, but I did want to offer the chance. We have a little bit of time, and if people are interested, if you want to unmute, if you want to verbalize any questions on your own, I'm just going to allow for a little time space for that. If anybody often takes a minute to get there, if you want to unmute and ask questions of Colin or Yvonne or Carl or myself on anything related to opportunity zones or the GroundUp project, governance project, excuse me. I don't see anything coming in. So if you guys have anything else, oh, we got one, here we go. Well, will you be aggregating any data for comparison purposes? Eric asked.
So at this time, we don't have plans to. I am optimistic that we will get to a place where we have enough data to aggregate while keeping everything confidential. But again, we would only do that in a very, very high level way and kind of for ourselves to see what's going on. But if we were to do that, we would let any users know that we had those plans. And that's a very long way off for us. So that's, if we have thousands of projects on the system, then we'll visit that, but we aren't there yet.
Great, thank you. Anything else you all would like to share? We're so thankful to have you here today.
Well, thank you for inviting us to be here today. I think the only other thing we really would like to share is, if you're interested in learning more about this and talking more about it one-on-one, or contributing your thoughts to where it would really be useful for you, we would love to hear from you. Please reach out to either me or to Yvonne, or to our organizational email, which is info@governanceproject.org. And we would love to hear from you. And please sign up if you're interested in being among the first to use this tool for projects in your local area.
Awesome. Thank you so much. Thank you all for attending, and we will adjourn and see you next month. Have a great day.
Thank you. Thanks for having us.
Thank you.